Hey everybody, good afternoon. Let's go ahead and talk about this SPX trade that I took this morning. It actually was really early for a butterfly. And then after that, I want to talk to you a little bit about swing trades because I have had luck trading swings, and I'm hearing a lot of it's not really the market to swing trade in, but I do think that there's a specific strategy that I like to use to kind of help you ease into swing trading. And again, I'll touch up on that just a few minutes before the close here of this video. So the first thing I want to show you is the SPX trade. Again, just a quick 200% today. You can see that. This is not the first time that we've had success using the Fibonacci supply and demand that I teach around my automated levels. The first thing that I want to show you is that we want to pay attention to structure. Okay, so the structure itself, we're just basically sideways motion. We started to trend up. We're making higher lows, and you can see that higher lows. And therefore, what I was looking for was an attempt into this automated level. And you can see when I hover over this, we have this yellow line here. So we have a yellow line there and one here. We want to be long from here, and we want to basically ease off of our longs as we approach this supply zone. Now, when we open up this morning, I want to take you into a 5-minute chart. We gapped up on the SPX. Now, the first thing that I teach, if you just kind of get some of these candles out of the way, and we come over here, what I want you to do on any gap up is just go ahead and find that gap and come up to the pivot high. Now, the pivot high is once price eases off and the buying pressure comes off and we start to move down, I want you to measure it. I want you to find the 23.6 and the 38.2. Look for bids to come in there. Basically, the probability is really low that we're going to fill a gap unless we start to close under there with those candles. I noticed right away we actually went short here on our futures trade, so that's another trade that we took. I covered right here towards the 38.2. And then I went ahead and bought the SPX butterfly to pin up at my automated level, which is a supply level. And you can see that we ended up closing right in there. Now, I did take this off about 9 or 10 minutes early for 200%. I'm sure it could have got more than that, but we were trying to pin between 20, 25, and 30. And it just kind of closed right over that level. I think it ended up closing out at $2 and some change, and we ended up closing out for $1.35. Now, again, I hope that technique can use you on Gap Up. If you have any sort of questions around that, please reach out to me. Now, let's talk about the next trade that I took, which was Intel, INTC. We made a nice 47% there. I ended up selling totally out at, let's see, $4.20, hence the Elon post here. But I want to show you that really quick. And although I did buy a lot of time, what I like to do here is look at a very large time frame. Okay. And what I noticed yesterday when analyzing, or 2 days ago when I took this trade, maybe a couple days before that, I apologize, is that we came into an area of demand. So we had this 25.33 here. We were creating the formation of an inside and up. We took out, if long-term traders probably had stops in here right above these candles, and you could see that acted as a liquidity magnet. So hopefully we've stopped out some people here that were short. We do need to build a base above here. I do like this trade even longer term. I went ahead and took the, I guess you could say, easy 47%, but it wasn't easy. It was down there for a few days and then took off. But we had bought 50 plus days out. Now what you're looking for in Intel is, again, a base above here, 31.41. And then I'm looking for this next EMA. This is your 44 actually, and that is at 33.90. I would expect it to pull back from there, kind of hold in that area for a week or so, and then come up here and attempt towards 35 and a half. Listen, swing trading, is it easy? No, but there is a technique to it, and I'm going to show you just really quick how I do it. I always figure out an allocation amount that I am happy with, and we're just going to give you a hypothetical number. So if you've never seen me teach, please listen up. This is the way that I approach it. Let's say that I am willing to spend $2,000 on a swing trade. All right. A swing trade for me, I'm buying probably 30 to 60 days out. Okay. Now, in this market, I need to expect to be wrong. Okay. Everyone's expectations are they want money right away, but you can't be a swing trader if you want money right away. Okay. So what I do is I scale in. Now, in this particular trade, I didn't scale in because I bought just around $1,000 worth, and it took off, so I went ahead and closed it out. Okay, because it's rare that I get that opportunity in this market, but what I do want to do is just make sure I explain to you. So when I expect to be wrong, I'm going to go ahead and go in, let's say at $500, and then once the market pulls back into a key level, not just a percentage. So I don't sit there and go, hey, I'm down 50%. I think I'll add some more. That's not how it works. I don't really care about the percentage of the option. Okay. What I care about are my levels. So once I come down here, depending on how much this costs, I'll buy, let's say, another $500 worth. Okay. Now I typically will add up to 2 to 3 times, and then I want to get towards this number. Now it's a slow add as I go down. And then on the very last line or the very last level, I want to be adding double or triple of what I did when I started here, as long as I'm staying within this number. Now, this number represents what I am willing to lose because in swing trading, we could wake up, there could be a catalyst, anything could happen, and that money could be gone. So I'm always comfortable with the amount that I am trading with. And that allows me to sleep at night. And in this market, folks, where a lot of people, unfortunately, are putting so much concentration on the intraday trading, it can get a little crazy. All right. And when it's a little crazy, a lot of people are wondering what to do, right? So back here, if you're paying attention to this chart, you would have never seen the big picture, and then you would have never been able to capitalize on the bigger move that actually was given to us by looking at the higher time frames. Okay. So once again, I hope this really helps you guys in your idea of swing trading. And I hope that the SPX trade also kind of helps you with that gap up methodology that I've been teaching for many years. Once again, if you have any questions, please let me know. Please like this video, and please subscribe to my YouTube channel. I really, really appreciate it. And once again, I am out here on Twitter. You guys can follow me there where we have a lot of good information that I'm going over with constantly. Actually, if we come right over here and we get into Twitter, this is about what I'm about to send out right now. But my name and everything is here. So if we go into my profile, give me 1 second. Let's open this up really quick. And go here. I am Trendy John, so it's going to be at TR3NDYJON. And funny story, a lot of people don't know this. This is Bob, right? That's just what we call every one of these guys out in Florida. This is Bob. He's hanging out near our home here. We live on the water in Florida. This is my wife, Ashley. And the uh, the TR3NDY, let's talk about that really quick. A lot of people don't understand this. The T stands for trend, because I like to say that I like to follow the trend in the market. The R stands for range, because I really am, at the end of the day, a range trader. I like to trade between different ranges on a weekly, a monthly, and so forth. And the N stands for no news. Our family is a no news family. We don't watch TV. And so we stay away from news because I don't think that news is a good mix with trading. I'm technically just into technicals. And the D stands for demand and supply. That's where my background comes from. And then Y is you, because we all know that you can have all the wonderful things in trading and all the beautiful charts, but if you're not mentally prepared for trading, you can have a very difficult time. So now you kind of know what Trendy stands for. I hope you guys give me a follow. And again, if you have any questions, please reach out to me. Have a great day.